Hello, my name is Nikolay and today I will present you my analysis on the topic of expansion into overcapacity. Is it a winning strategy or value destructor? And as an example, I will be using Moller-Maersk company. Moller-Maersk is a Danish conglomerate with the main businesses in container shipping and upstream oil, which operates in over 130 countries. To understand the company's recent performance, let's examine relative wealth chart and the internal drivers of CFROI. Up until 2004, Moller-Maersk was creating economic wealth, earning return on capital above the cost, which was strongly rewarded by the market. That was mainly driven by improving margins and slightly by sales growth. Meanwhile, the company was growing the asset base, which led to decline of asset turns. In 2005, Moller-Maersk conducted significant acquisitions, increasing the asset base by 45%, which grew sales by 48%. However, improved profits were not able to offset the decline in asset turns and margins, dragging CFROI below the discount rate. But the market has positively reacted to acquisitions, expecting significant synergies. In the next 8 years, with the effect of global financial crisis and recent industry's decline, Moller-Maersk continued to expand the asset base, leading to decline in asset turns by 25% and deterioration in margins and sales growth. That caused the CFROI to decline to the levels lower than the discount rate. However, investors rewarded such performance and now hold estimates an upside potential of 88%. Due to such a contradictory picture, we need to look at the competitors' performance and determine whether the strategy used by Moller-Maersk is value destructing or value creating. Comparing Moller-Maersk to the industry, we observe that its CFROI is above the peers and the asset growth is lower than the rivals. Moreover, the whole industry's CFROI is lower than the asset growth, which in turn is lower than the discount rate, leading to the conclusion that the whole industry is suffering. The same can be concluded by looking at the supply and demand for fleet capacity at the global level. As everyone was expecting China to continue to grow, companies were substantially increasing their fleet. However, the demand for containerization slowly flattened, but the bigger ships were already ordered. That led to overcapacity crisis that analysts expect to continue for the next 3 years. As a result, industry is entrapped into a vicious cycle. To survive downward pressure that overcapacity has imposed on prices, companies seek to lower costs by acquiring larger and more efficient vessels. The net influx spawns further overcapacity and lowers vessel utilization, putting even more downward pressure on prices. Additionally, low interest rates stimulating the expansion of borrowing with the aim to finance new ships and declined oil prices providing significant benefits to the carriers serve as a support for continuation of the crisis. The forecasted global GDP will deteriorate the industry even more. As the Asian regions face declined economic activities, EU has financial problems, and the US is expected to face negative effects of its monetary policy in the near term. All above implies global decline in trade and therefore in demand for containerized carriers. The relation of the industry with the oil prices is known to be negative. However, Moller-Maersk has shown somewhat different over the history due to the expanding share of Maersk oil in the portfolio that benefited from oil price growth until 2011. But then the company strongly increased its shipping businesses, decreasing the correlation to more common industry levels. Today, most carriers remain unprofitable with the exception of niche-focused specialists that have maintained a sharp focus on operational improvements in response to persistently decreasing freight rates, and global deep-sea scale leaders that rationalize their networks and minimize costs by increasing average vessel size. Moller-Maersk is the biggest global container liner, and expansion into overcapacity is highly beneficial for it, providing great cost savings, scale economies, and efficiencies. However, these benefits will be observed only in the medium term, and in order to improve the performance in short term, Moller-Maersk started optimizing and improving the existing portfolio of businesses. Additionally, Moller-Maersk has committed to expand its oil business, a strategic step that will benefit the company in the long term, as the oil prices are expected to recover. Also, to provide CFROI above the cost of capital, Moller-Maersk needs to improve the asset utilization, something what is likely to happen only in the medium term when the global trade will recover, and further optimize costs and networks. Another suggestion for Moller-Maersk would be creating strategic alliances that would result in shared service centers, reducing costs even further. But Moller-Maersk has already taken that step, aligned with MSC. On the other hand, Moller-Maersk should avoid M&A activity, as the small player will not result in synergies, and consolidation with a bigger player will bring financial burden on the company and unwanted regulatory attention. Current valuations signal that Moller-Maersk is undervalued by all measures. That leads us to the conclusion that Moller-Maersk will be able to manage key risks, some of which have already been reduced by strategic movements, and given the short and medium-term outlook for the company, Moller-Maersk is undervalued by 88%, and the expansion into overcapacity for Moller-Maersk was not a mismanagement, but was a neat and wise strategic step that allowed the company to stay competitive. Thank you.